If you keep $50,000 at the bank on the corner, this story is about you. Right now, in the biggest country on earth, people are standing in line to pull their money out of the banks. All of it, in cash. Since the start of the year, Russians have pulled out about $30 billion. Picture it as 600,000 households, each walking out the door with $50,000 in a bag. More money has left Russian banks this year than left in the entire first year of the war, and almost nobody in America has noticed. Here's the part I can't stop thinking about. The reason they are running was said out loud into a microphone back in June by a man in a suit at a podium. I will read you his exact words in a few minutes because they explain everything. The government's answer? The finance minister called the whole thing fake news. The lines got longer. I caught this story the way I catch most of them, on a screen full of live numbers I check every morning with my coffee. I'll tell you about that screen in a little while. First, you need to see what a real bank run looks like, because we are watching one live, and it rhymes with something that happened here at home. Most people get that story wrong. I did too, until I checked. Here is the run in plain numbers. In the first 2 weeks of August, Russians pulled almost $3.5 billion out of their banks. In June and July together, almost $12 billion. The single biggest day was August 12th. The money has now flowed out for 7 months straight. In August, it left on every single working day. Not a bad week, not a scare that passed. A slow, steady, growing walk to the exits. Why cash? Why now? 3 reasons, and they stack. First, the war came home. Drones hit cities. The internet gets shut off in whole regions. And when the internet dies, the card reader dies with it. Tap to pay becomes hope you brought paper. A man who has watched the power flicker learns to keep bills in a drawer. That part is just common sense with a motor on it. Second, there is talk of a new draft coming. A man who fears a knock on the door wants his money where his hands are. And third, the big one, the rumor. The rumor that the government might freeze the deposits, lock the accounts, cap what you can take out. The finance minister, a man named Anton Siluanov, went on the record and called it fake news. Now, there is an old Soviet joke, and every Russian over 50 knows it by heart. Never believe anything until the government denies it. The denial came in August. So did the biggest withdrawal day of the year. But a rumor alone doesn't move $30 billion. A rumor needs fuel. So let's open the engine, because the buried part of this story is the fuel, and it was built by the government on purpose. 2 years ago, Russia's central bank pushed its main interest rate to 21%. 21! Banks turned around and paid savers about 20% a year just to park their rubles and sit still. Say that in kitchen table terms. You park $100,000, you collect $20,000 a year for doing absolutely nothing. When was the last time anybody paid you 20% for sitting still? That is not a savings account. That is a bribe with a calendar. And it worked. Russians piled 67 trillion rubles into the banks, about $900 billion. Spread it out, and that is roughly $6,000 for every man, woman, and child in Russia, all sitting in one place, all quiet, all lendable to a war economy. The bribe kept the money in the barn. Then the bribe started shrinking. The central bank has been cutting the rate all year. It sits at 14% now, and it is headed lower. The payment for sitting still is falling, while the fear of the doors locking is rising. Even the central bank's own July report admits it, in one dry little sentence. Households' propensity to save edged down. Translation? The barn door is open, and the horses have noticed. Now, here is the kitchen table version of the real problem, and I'll tell it the way it happened at my house. My wife is a doctor, animals, not people, and she asks better questions than most economists. I told her the bank pays me interest for keeping my money there. She asked where the interest comes from. I said, well, they lend my money out. She looked at me and said, then it's not there. And she went back to her coffee like she hadn't just said the whole thing. Then it's not there. That is a bank. Every bank. Not just in Moscow, in Phoenix, in Dallas, in your town. The bank holds a small slice of the money in reach and lends the rest away. That is not a scandal. That is the design. And the design works beautifully right up until everyone shows up on the same morning. A bank run is the one panic where panicking early is the smart move. First in line gets paper. Last in line gets a promise. Which brings us to 1929. You have heard of the Great Bank Run of 1929. So had I. I have said 1929 myself. Then I went and checked, and here is the correction, on camera. There was no bank run in 1929. What crashed in 1929 was the stock market. The run on the banks came after, in waves, from 1930 through 1933, and it was worse than the crash. About 9,000 American banks failed in those years. And here's the part that should stop you cold. There was no deposit insurance. None. If your bank died with your $2,000 inside, your $2,000 died with it. No refund, no claim form, a letter maybe, years later, with pennies in it. By the winter of 1933, the fear fed on itself, state by state, line by line. So on March 6, 1933, at 1 o'clock in the morning, the brand new president closed every bank in the United States of America. Every single one. For about a week, the richest country on earth ran on pocket change. You had what you had, and nobody could touch the rest. They called it a holiday. Nobody was celebrating. The banks reopened in stages, the strong ones first. About 4,000 never opened again. And on March 12th, Franklin Roosevelt got on the radio and told a frightened country, in his warm fireside voice, "It is safer to keep your money in a reopened bank than under the mattress." 93 years later, almost to the word, that is the Russian finance minister's job. Stand at the microphone and talk the line into going home. Different flag, same sentence. So let's do this straight, same, and different. Because the differences matter as much as the echo. What's the same? Three things. The design is the same. Then and now the money is mostly not there, because it is lent out. That is what a bank is. The fear is the same. It feeds on itself, and the man who runs first eats best. And the government playbook is the same. Deny, soothe, and keep the option of locking the doors in the desk drawer. Roosevelt didn't ask depositors for permission. He signed, and the doors shut, and the country found out on the radio. What's different? In 1933, the American banks were actually broke. The fear was chasing a real hole. Thousands of banks had gambled on good times and lost. And there was no insurance, so the fear was rational all the way down. Russia in 2026 is stranger than that. The Russian banks are not the problem. They are stuffed with deposits and propped by the state. Russians even have deposit insurance now, about $17,000 per account. So what are they running from? They are running from the owner of the rule book. Not my bank might fail. That risk has insurance. The fear is the man who writes the rules might change them. And there is no insurance for that. Read it again slowly. Your bank can go broke. There's a fund for that. Your government can rewrite what your account even is, and there is no fund for that. Anywhere, in any country, at any price. And if you think rewriting the rules is a Russian habit, stay with me, because 1933 has a second act that never makes the school books. 1 month after the bank holiday, April 5th, 1933, the same signature ordered every American to turn in their gold. Not a request, an executive order. Hand your gold coins to the government at the official price of $20.67 an ounce, or face prison time. Then, The very next year, the government repriced gold at $35 an ounce. Same metal, same vault. The people took a paper price. The government took the gain. The dollar you were told to trust lost about 40% of its gold value by government pen stroke. They didn't just close the banks, they repriced the exit. Hold that thought. It is the whole reason this channel talks about Bitcoin, and we are almost there. First, I owe you the man at the microphone. June 22nd, Moscow, the Communist Party's election congress. Gennady Zyuganov, the party's leader for decades, stands up and points at the people's savings, all 67 trillion rubles of it, and says, and this is the quote, "That is 3 state budgets. They are sitting there and enriching bankers." He proposed that 30 trillion of it, about $400 billion, could be, his word, mobilized, put to work, for the state. The chairman of the Duma's Financial Committee called the idea extremely irresponsible. Notice the word nobody in the room used, impossible. Nobody said impossible. In Russia, that silence is a weather report. So walk the timeline, like a Russian saver walks it. June. A famous politician calls your savings 3 state budgets, sitting there. August. The finance minister assures you that freeze talk is fake news. Also August. Cash leaves the banks at the fastest pace in 30 years. Those people are not crazy. They are doing arithmetic. I trust that kind of arithmetic because it is the only thing that never lied to me. When I was 19, in my first college class, a professor told us the average 4-year degree earns you $42,000 a year. I was already making $38,000 a year part-time, selling long distance on the phone. I did my own math, and I walked out of college. Cheapest lesson I ever bought. When the official story and your own arithmetic disagree, trust the arithmetic. 67 trillion rubles just came to the same conclusion. And I learned the other half of the lesson at my first big job. I worked for WorldCom. It collapsed in what was, at the time, the biggest accounting fraud in American history. I was 25. Here is what that teaches you, once and forever. When the people running the numbers lie about the numbers, the little guy finds out last, and he finds out at the door. By the way, the arithmetic these Russians are doing on their own kitchen tables, mine lives on my dashboard. The 2-minute money quiz at timtalksfinance.com/members shows what inflation is quietly costing your cash, your number, in dollars per year. Now, the money is out of the bank. It is paper, in a drawer, under a floorboard, sewn into a coat. Problem solved? Not even close. Because the ruble under the pillow has an issuer too, and the issuer is printing. Official Russian inflation is about 6%, and that is the official number, measured by the same people denying the freeze. The pillow pays 0. So the pillow loses, automatically, every single year. Here's my old trick for seeing it clearly. Change the denominator. Stop measuring your money in money. Measure the pillow rubles in bread, in gasoline, in eggs, and the stack shrinks while you watch it. The freeze they fear would take it all at once. The printer takes it a little every day and never gets accused of anything. Dollars, then? The Kremlin limits foreign cash. Gold? Closer, gold has no printer. But gold is heavy. Gold gets searched at borders, and 1933 already showed you what a government does about gold when it's cornered. It calls it in, at its price, with the same pen that shut the banks. The safe thing outside the bank was confiscated by the same signature. Every exit on the list so far has an owner, which is why the next fact is the buried treasure of this whole story. This summer, July 21st, while its own citizens were hauling cash out by the truckload, Russia passed a law making Bitcoin legal property. Starting September 1st, Russia gets licensed Bitcoin exchanges, licensed brokers, the works. The country that spent years sneering at Bitcoin just gave it a legal identity. And then they told you exactly what they think Bitcoin is. Because in the same law, they put a cap on it. A regular Russian citizen is allowed to buy about $3,800 worth a year. That's the limit. Your yearly allowance of Bitcoin. About the price of a used snowmobile. Oh, and you have to pass a state test first. Rich, connected investors get about 10 times more. And the state itself? No cap. The state wrote itself unlimited rails to settle foreign trade in Bitcoin, to slide around sanctions. Russia looked at Bitcoin, the one door with no doorman, and did the most Russian thing imaginable. It hired a doorman. Think about what that cap is confessing. Governments do not ration things that don't work. Nobody caps your yearly allowance of lottery tickets. They capped Bitcoin because Bitcoin is the exit, the one asset on the list with no issuer. The ruble has a printer. The deposit has a rulebook with an owner. Gold had a confiscation order with a signature on it. A tokenized dollar has a company and a freeze switch. Bitcoin has 21 million coins, fixed, forever, run by no server and no man, only a protocol. You cannot print Bitcoin. You cannot subpoena Bitcoin. There is nobody to call, nobody to pressure, nobody to arrest. So the best a government can do is stand in front of the door and ration the line. A month ago, I told you they are building a freeze switch for everything, and that Bitcoin is the only exit that doesn't have one. Russia just ran the live demonstration. A whole nation of savers pulling paper out of the banks, and a government quietly rationing Bitcoin, the real exit, at $3,800 a head. I didn't learn to trust Bitcoin from a podcast. I learned it in a mortgage office. Years before anybody on television said the word Bitcoin out loud, a client from Dubai walked into my shop buying $1.5 million condo with $500,000 of the down payment in Bitcoin. The machine treated it like drug money. My underwriter couldn't touch it. So I printed out the public ledger because Bitcoin's books are public, every transaction, forever, and I handed it to her. She didn't take my word for anything. She checked the ledger herself, line by line, and approved the funds. No lawyer, no lobbyist. One honest woman and a ledger anybody on earth can read. That is Bitcoin. Money you verify instead of money you trust. My grandmother's family came to this country as refugees from Syria. Here is what refugees know that the rest of us forget. Nobody flees with a bank account. The account stays behind with the country that failed you. You flee with what you can carry. Gold if you can hide it. Paper till it soaks or burns. Bitcoin crosses a border inside 12 memorized words. A fortune in Bitcoin, in your head, that no checkpoint can find and no order can call in. There has never been anything like that. Not once, in the whole history of money. So let's bring this home because I can hear it through the screen. That's Russia, Tim. It can't happen here. Friend, it did happen here. 1933, twice in one spring with one pen. Every bank in America closed by proclamation, and every citizen ordered to hand in his gold. Your grandparents lived it. The country that did that is not a foreign country. It's this one, 93 years younger. And the machinery is getting faster, not slower. Your money at the bank today is not a stack of bills in a vault with your name on it. It is a row in the bank's database, a promise. Now, the biggest American banks, JP Morgan, Citi, Bank of America, Wells Fargo, are building a shared network to turn deposits into digital tokens on rails they run together, targeted for next year. Understand what that means for speed. In 1933, freezing every account in America took a presidential proclamation, a week of chaos, and 10,000 bank lobbies. On token rails, it is a checkbox. I am not saying they plan to click it. I am saying the box is being built, and the men building it answer to whoever holds the pen, and you now know what a cornered government does with a pen. Yes, your deposits are insured up to $250,000, and that insurance is real for a failing bank. It does nothing about a changing rule. Same split the Russians just figured out. Bank risk is insured, rulebook risk is not. The rulebook owner is the one player you cannot buy insurance against, except one way. That way is Bitcoin. So no, I am not predicting frozen American accounts next year. Probably it never happens here again. But probability is the honest word, and probably never is exactly what Russians would have told you in May. It's what Americans would have told you in February of 1933, 4 weeks before the doors locked. There are no certainties, only probabilities and prices. And right now, the market price is Bitcoin, no issuer, no printer, no doorman, no free switch, like it's optional. 21 million Bitcoin for 8 billion people. About a third of one coin per millionaire on Earth. If only the millionaires wanted one. There is not enough Bitcoin for the people who are already rich, let alone for everyone who ever finds himself in a bank line. I'm not telling you to do anything. That's not this channel and it's not me. I'm one guy offering a perspective and showing you the arithmetic, the same way I handed my underwriter the ledger and let her check it herself. Check it yourself. Watch the lines in Moscow. Watch the cap they put on Bitcoin. Ask why a government would ration a thing that doesn't matter. Wherever the truth lands, and this week it landed in a bank line in Moscow, it keeps landing on Bitcoin. If you want to run your own numbers the way I run mine, it's free, no credit card, 2 minutes. Take the money quiz at timtalksfinance.com/members. You'll see your net worth in one place, what inflation is actually costing you in dollars per year, and one move worth considering, yours, not generic. I built it so you don't have to figure this out alone. Remember the rule from the top. First in line gets paper, last in line gets a promise. Bitcoin is how you stop standing in that line at all. 21 million Bitcoin. Fixed. Forever. No servers, only a protocol. The Russians in that line figured out the question. Make sure you've got a better answer than a pillow. See you in the next one.